Well, hello again, Solis Wealth family. Greg Solis here with the update. First, on the family front, we sure had a great time through the holidays. I hope you and your family did as well. Had everybody in town, pretty crazy. So Nicole came in from Hawaii, Emily came in from TCU, Jack came in from San Diego. They had friends, they had all kinds of stuff going on. But we had a wonderful time, we really did. And Christmas Eve was just a wonderful dinner, and then we had Christmas morning together, and so it was just a good time. I hope you and your family had a great time as well, and my very best to you in 2025. I hope 2025 turns out to be the best year ever. Market-wise, we had two good, fantastic years. Matter of fact, we had to do some rebalancing of the portfolios. We had a lot of capital gains and things like that, so we were doing a lot of tax harvesting. We sent letters out to you, you'll get those, and we did what we could behind the scenes to try to reduce the tax liability as much as we could. So be aware of that. We did some rebalancing towards the end of the year, as I mentioned before, but we're all in good shape. But 2023 and 2024 ended up being two good years in a row, where the S&P 500 was up over 20% 2 years in a row. So since October of 2022, we have covered a lot of ground. If you recall, 2022 was a tough year. Both the bond market and the stock market took pretty big hits. 2023 turned out to be a good year. 2024 turned out to be a great year. So it was a lot going on with the S&P 500 as it moved forward up over 20% per year. Most of that was driven by the so-called Magnificent Seven. I know I've been talking a lot about that with artificial intelligence and all the things going on. This has been a huge move. And so we've seen large cap growth stocks really drive the market for the most part. Value stocks didn't do quite as well, small caps didn't do quite as well, and foreign markets didn't do quite as well. And the bond market struggled. It moved along pretty good in the early part of 2024, but the last quarter of 2024, we saw interest rates spike up. 10-year Treasury went from about 3.5% all the way back to about 4.5%. And a lot of that was because the Fed got a little more, a little slower on lowering rates. And we think that's going to be a trend in 2025. We don't see the Fed being as eager to lower rates because, frankly, the labor market looks strong. Unemployment numbers still hanging around, the 4.25% range, thereabouts. And so the Fed probably could keep rates higher longer and not be so aggressive in lowering rates. That's why we saw the bond market sell off a little bit with interest rates going up a little bit. Bond market didn't perform as well in 2024. However, we got nice yields. So, if you're a buy and hold type of investor with fixed income, kind of a good opportunity to buy some nice yields. And then, of course, if rates do come down a little bit, we might get some price appreciation as well. But overall, 2024 has turned out to be a great year. We think 2025 will potentially be another good year. But again, like I always say, we got to hang on tight because there's a lot of things that could happen, whether it's politics, weather, war, pandemics, all kinds of crazy things going on out there. But we feel cautiously optimistic that 2025 could potentially be another good year. But that's it for now. Again, I hope you have a great 2025. You know we're here for you if you need us. Never hesitate to call. My best to you and your family. God bless. Take care.